Hi, Jacob here once again. I'm just going to take a quick run through the Ripehouse tools just to demonstrate visually for us how to actually find street level sweet spots in our suburb of interest. And this could be any suburb across Australia, any hotspot location that is primed for great capital growth. How can we reach across the nation, analyse these suburbs that we're looking at, potentially as a local would, but find the absolute sweet spots that are primed for capital growth that's above and beyond the suburb norm. So in this case, I'm going to use Morayfield, which is just north of Brisbane. It's one of our top 10 suburbs on the national top 10 sweet spot report that was recently put out by us here at Ripehouse and also Terry Ryder at hotsplain.com.au. So this area has a lot of capital growth buy signals and things going for it as a suburb and a region, as the wider Moreton Bay region, that is priming it for growth into the future. Let's take a street level analysis of Morayfield. It is going to refer back to a lot of the concepts in part 2 of the Myth of Capital Growth infographic series. So check that out if you haven't already. But let's jump in. So coming into Morayfield, 335 is our average purchase price, 4.7% yield. 4-bedroom houses, most in demand, and 121 days on market. So you can get some really good quick look information there around the suburb. This is the My Suburbs page. So this is your daily shortlist where you jump in. Suburbs that you're interested in are shortlisted here. You can monitor these metrics on this page to see how the suburb is changing. This is a rolling number that you see in front of you, so it is actually changing very regularly. Is the suburb now coming into your meeting your requirements or not? This can be monitored here, but we can use it as our launching pad. So let's go into analyze Morayfield. This is loading up our main suburb map analysis page. Now, this is this is coming from us, but we think this is the most powerful suburb level and street level analysis tool you can find to find property, understand the suburb and the local price dynamics, hyper local price dynamics and area dynamics in a suburb. A lot of this data we have gathered over the last few years and then maintained it. So public housing data, as an example, we monitor public housing data at a street level across the whole of Australia, and we work on a 6-monthly rotating cycle where we jump in and actually update public housing data where it has changed. We work with local governments directly to see their policy changes and update that data moving forward. So it's incredibly accurate, and we do index that with what's happening in 2015. That same concept is rolled out across yield, rent, occupancy type, property type per street. So we have incredibly accurate data, hyper-local data, so you can understand these suburbs that you might not be overly familiar with. Because Morayfield is an example. We've loaded the suburb up here. We've got 149 properties on the market. We can see our suburb median price here of 339. That's for current on-market properties. We probably don't want to go through all of those individual properties one by one. It's going to take us a lot of time. So we only want to be focusing on the sweet spot street locations within Morayfield. Let's only focus on those streets that are going to potentially amplify the capital growth of Morayfield overall. We don't want to be investing in a dead spot. So just how do we do this? We've got these toggles down the left-hand side of the screen over here. Each of these toggles will put a metric onto the map in terms of an overlay. So this one here, occupancy type, darker the green really quickly are higher predominantly owner-occupier areas. So we can see in this southern, less dense area of Morayfield, so larger block sizes, each of these areas I'm hovering here relates to 200 dwellings. The darker the green, more owner-occupiers, so lots of owner-occupiers preferred down here in the south. Tenants are demanding properties up here in the north, which is closer to the key amenities and transport, etc. We're just going to be a little bit careful generally for these investment grade suburbs when they are moving through 7 o'clock on the property cycle, they are moving into a growth phase. A lot of the preliminary growth that occurs in these suburbs is on the back of tenant demand. So people moving to the area, really demanding to live there, they start to pay more to rent, and then the property prices generally are linked as a buy signal to increases in rent per week. A lot of reasons for that. Potentially the increases in rent per week may attract more investors into the market. That increases the buying pool, increases the demand pool for properties, and with higher yields, property prices are attached to that. But just breaking it down, tenants being attracted to an area may be for the extra utility in the suburbs, so extra employment, population increases, gentrification, widening and broadening appeal of the suburb overall. They're all reasons to attract more tenants. Let's focus on those areas where tenant demand is strong. So where the big three are occurring, we've got lots of tenants, so minimum 30% tenants, but not too many. So still some owner-occupiers in the street just to improve their property, take pride in the property, and increase street appeal for the street overall. So we don't want to be left in a tenant enclave that's going to be sort of, down the doldrums in a lot of cases when you have 80, 90, 100% tenants. Let's focus on the real meat of the suburb. So between 30 and 70% tenants is going to give us a great mix. A nice, strong tenant demand, but still some owner-occupiers to improve their property. Now, this is where it starts getting really interesting. When you add to this, so strong tenant demand, also paying above average rent to live in that street when compared to the suburb overall, and also above average yield. It's not the prestige properties, the tree-lined streets, etc., where rents are higher. It is common, high tenant demand, commoditised type of property where high rents are accompanied with high yields. It's a very, very powerful mix when you have those three things together. So when you come into Morayfield for capital growth, in a location, a hotspot location that's moving from 7 o'clock through to 12 o'clock on the property clock, in its growth part of the cycle, let's start looking at these really strong tenant demand street clusters. Let's combine that with amenity sweet spots. So remember, we want to be the key distance away from the three big amenities, which are shops, schools and transport. So in that nice, or generally within a kilometre is the best bet for us to make sure we're not in a amenity dead spot. And then I don't like too much public housing. So we can see exactly where public housing is on the map here as an example. We can zoom in. The darker the red, the higher the level of public housing. So you can see the level of public housing for every street across Australia. You can click on any of these areas and it's going to drop down from the top here. The darker the red, the higher the public housing. Only 2% public housing overall. This dark red area here is 11.4%. So I'd probably be adjusting this, and I generally have a rule. So higher levels of public housing will, and according to our experience and research, add extra volatility to a property investment. So higher vacancy rates, lower street appeal for properties. You might be in a dead spot in terms of capital growth. And that's sort of going to put pressure on the investment property and increase the risk to you. So these are all things that are typically associated with high public housing enclaves. What's the break point there? What's the point where we don't accept? And generally for lower socioeconomic suburbs like this, 15% is where I really start to see a dramatic increase in or lowering of street appeal, and that's going to affect your ability to hold quality tenants. Drive rental increases up with the suburb overall, and yeah, as you remember, one of the reasons why we're drawn to the suburb at this point in the property clock, as Morayfield is because rents are increasing, and that's going to be attached to the future growth. So let's focus on the areas where rents are not going to be held back, they're not going to be a dead spot. We want to have rents being able to be driven forward nice and strongly. So look, there's lots of other toggles, lots of other information on this page I can go into. I could spend a lot of time doing that, but in the case of this quick intro video, I really am trying to help you become local area, street level experts for any suburb across Australia. In this, we're looking at the big three. So lots of tenants paying above average rent, above average yield, in great amenity sweet spots, and then also without that added risk around high levels of public housing. So to make it really easy for you to do, we can use our sweet spot toggle up here, turn that on. Each of the metrics I've just spoken of there is listed horizontally. We can adjust our tolerance for those things. So 42 street areas in Morayfield overall. If we decrease our tolerance for public housing as an example, the number of areas that will be selected is decreased. That goes all the way down through the nets to the bottom. If we start tightening these up as well, you can see that the areas going to be selected based on our tolerances is going to be decreased as well. If we drop that right down to 2, obviously, there's only going to be 2 areas selected overall. So this is a way of really focusing on the areas that are going to match our strategy overall. Another thing that I did mention, so houses are most commonly in demand. So 94% of property are currently houses. Let's focus on houses. Let's not invest in streets that have lots of units. Let's focus on the streets that have a lot of the core commoditised property type, which tenants are preferring and demanding at the moment, which our algorithms show you exactly what is currently most in demand by tenants. We can only focus. We can use this tool here to only focus on the streets that have a maximum of 33% of the opposite property type is our general rule here. Now, you don't need to be an expert, you don't need to know all these things. We're holding your hand, and we have these recommended strategy overrides to adjust the tolerances for each of these metrics in line with what we recommend as the optimum strategy for this suburb. And you can see we've got different toggles up here, so a capital growth override, a flipping override, and a cash flow override. So based on your actual specific strategy, obviously a cash flow will be very heavily focused to the higher yielding and higher renting areas. Flipping is pushed more towards owner-occupiers with lots of houses where an owner-occupier might pay a premium for a nice renovation. In this case, let's go with capital growth. So no upper limit on public housing. We don't have any areas pushing over 15% public housing there. Occupancy type, it already sets our toggles at 30 to 70% there, which is what we want. Property type, let's focus on the houses. Rent per week, median or above, and yield per week is median or above. Now, it has some smarts there because any more than 4 areas selected, it's probably too much to focus on, and you're looking at too much of the suburb, and you haven't got your tolerances tight enough there. So it's actually automatically gone in and tightened the tolerances up until there's only 4 areas that are selected. So these are going to be 4 200 dwelling lots in the suburb that are absolute sweet spots based on our logic and assumptions. Now, once we've clicked them on the map here, we can see that they are highlighted now in the orange, and 3 of them are actually clustered close to each other over here, which I really like to see. Now, there's a couple of other things we can do now. There's a lot of functionality I won't cover off in this video, so stick around for the other videos in this series. But I want to filter these properties, 149 properties. I want to get off the map all the properties we're not interested in. I only want to focus on 3 and 4 bedroom houses. I know they're most in demand, located physically in these street areas, and I want to make sure that they're not affected by any negative elements within the suburb. So let's just jump in here now. There are flood zone information, so we can filter properties that are located out or in of a flood zone. Lots of other functionality. We won't go into that today. So I'm just going to filter properties now. Let's only show to me properties that are currently on the market inside of our custom sweet spot areas. 4 bedroom houses are most in demand. I'll always chuck 3 bedroom houses into that mix. Do check out part 3 in our infographic series. I will go into a lot of detail about the specifics around a property and potentially how to negotiate below market value for a property that's on the market. In this case, this is assumed knowledge. 3 and 4 bedroom houses are what we're focusing on. We can apply that filter. It's going to go off and think. It's only going to display to us properties that are on the market in those key sweet spot locations. We're then going to be appraising each of those properties, finding potential properties that have been discounted in their sales campaign so we can see that full sales campaign. And then we're going to be comparing apples with apples. So going off and doing our below market appraisal or strategy implementation. So it's come back, it's got 20 properties on the market now, down from 149. We can see the full listing history for each of those properties, etc. They're all listed there. And we can see that the average price, the median price for those 20 properties is actually slightly below our suburb median. So slightly cheaper than the suburb median in these sweet spot areas. I'll probably go into that, I think, in the next video. There's a lot I could go on to around the dynamics of pricing, etc., and how that should be affected. But I hope this has been a really good introduction into street-level sweet spot analysis in a suburb. All streets are not created equal. How can we find the absolute optimum buying conditions at a street level in these suburbs that we might not be overly familiar with? It's critically important. It's the missing piece of the puzzle in so many other methods of research, property research, other websites, etc. that's out there. The property is not put in context correctly with its street, which is not then put in context correctly with the suburb overall. How can we be assured of any suburb across Australia, if we're purchasing for capital growth, that we're going to be purchasing in streets that are going to amplify the growth for the suburb overall and not be a dead spot that's going to hold and pull the suburb down? So if Morayfield is going to go ahead by 5 or 10% in growth in the next 12 months, how can we actually be in streets that are going to outperform that 10% growth, and how can we avoid streets that are going to be pulled back and potentially not grow at all? So it's critically important. Ripehouse is a tool that allows you to do this very quickly and easily. You can save all those filters, the custom areas and the filter properties. You can load them up automatically when you load a suburb up. You can monitor the property data for each of those properties on the market there, and you can act with clarity and conviction for each of those properties that falls into the mix. So do join me for part 3 in this series. I will run you through the process of evaluating, appraising each of these properties on the market, finding the absolute key property that's going to deliver the growth, and then appraising that property so we can then negotiate under market. And I'll teach and talk through some strategies around how we can potentially buy under market value once we've appraised it. So definitely join me for that. I hope you found this little sneak peek interesting and enjoyable. Thank you.